Siti Cable Network is the stock that's in focus. The company's net losses have widened to 52 crore from 38 crores, which were seen in the corresponding quarter last year. To take us through the quarter gone by, Rajesh Sethi, CEO of Siti Networks, is joining us, and also Saloni Dhanuka from our research team joins us. Saloni, over to you.
So, sir, it was a fabulous quarter for Siti Cables overall, and first up, subscriber revenue has increased substantially. So what kind of income can we expect going ahead, and secondly, what could be the extent of pressure on margins, sir?
See, our subscription revenue has definitely gone up. It has gone up by 21% quarter on quarter and 52% year on year. Subscription revenue has been primarily driven by two parameters. One is ARPU. So when you look at our phase-wise ARPU, our monetization levels have gone up per subscriber basis. Hence, our ARPU levels and all the phases have moved up. In addition to that, we seeded around 700,000 new fresh boxes in our markets, which again added up to our subscription revenue drive up. It's going healthy, and I think we should be able to produce still better results in the next quarter.
On the flip side, the activation revenue has gone down by 48% on a Q-on-Q basis. And can you tell us what kind of target are you looking at by this year end?
See, activation revenue again is a parameter of fresh boxes you seed in the market. Now, as the digitization is going towards the end of the road in the country, because most of the areas are getting digitized now, the opportunity to seed fresh boxes really is now shrinking. So when you compare our results of quarter one and quarter one, we seeded 1.6 million odd boxes, whereas quarter two, we seeded 700,000 boxes, hence the dip in activation revenue. So the driver is the box seeding you are doing, which is again driven by the digitization wave, which is now really sloping down.
Also, in this current quarter, your HD subscribers have gone up by almost 30,000. However, the broadband subscribers have been more or less muted. So what are the targets over there by this year and again?
Definitely, we want to go a broadband business, but in broadband, we are focusing on three different parameters. One is controlling the churn, because adding new subscribers is one thing, but also sustaining what you have and holding back the people, because finally they add to your return on investments. So we are trying to bring down churn, and we have been pretty successful in that. Our churn ratios have gone down by 12% on annualized basis in this quarter. Second is moving ahead with reduction of our ground fault rate, so that again the customer satisfaction level goes up. That's again an area we have focused heavily. And third is what we call as smart deployment strategy, wherein we are not deploying too much of capex into broadband unless we are able to successfully monetize and have a higher percentage of conversion numbers from the markets where we are already there. Having said that, we have expanded into a new market. We have expanded into Nagpur, effective 1st November. We have just launched Nagpur. And the launch has been started with 70,000 plus home passes.
Could you also tell us about your average revenue per user looking like after the monetization of phase 3 and digitization of phase 4 in this quarter?
See, phase 3 and phase 4, when I compare my quarter to quarter, my quarter one phase 3 monetization level or ARPU level per subscriber was around 50 rupees. This we have moved from 50 to 55. And we have taken a significant jump in phase 4, where we have done a significant amount of seeding. For us, phase 4 monetization has moved up from 28 to 40. Whereas phase 1 and phase 2, there is only a marginal improvement, and they are generally around 105 in phase 1 and 85 in phase 2. Having said that, when I look at my portfolio mix, we are having around 3 million active subscribers in phase 1 and phase 2, and roughly 8 million in phase 3 and phase 4. And we definitely believe that phase 3 and phase 4 has a much higher level of leverage when it comes to movement of ARPU, which we are definitely going to gain in these 2 quarters before we close this fiscal. It should move substantially up in phase 3 and phase 4.
And so finally, can you give us some details on the update of TRAI's new tariff order plan, and how will it pan out for the company?
We are very bullish on the new TRAI tariff regulation order. We are eagerly awaiting for this to be announced. Pretty much bullish that it should be out any day. with the fresh implementation dates. That's a fantastic move, and I believe that will definitely give us an added lever with regard to our go-to-market strategy and our ability to interact better with our consumers and also drive the content prices down.
All right, sir. Thank you so much for your time. It was pleasure speaking to you. Once again, congratulations for a very good quarter.